But yesterday, a very important event occurred in the banking sector. Vijaya and Dena banks ceased to exist independently and merged into a big Bank of Baroda. Now we have a bank with, which is the third largest, almost 9 lakh crore of deposits, 9,500 branches, 85,000 employees. That's heavyweight. So we went up and met PS Jayakumar, the managing director of the new enlarged Bank of Baroda. I started by asking him, first of all, does he have enough capital?
It was 9.86 or 9.86 on the CET1 level.
Yes.
That was the capital that has remained same for Bank of Baroda and the consolidated company. There's been some changes between CET1 and between the core capital and the AT1 capital, but that's all mathematics. So the capital level is the same.
9.86.
Yeah, the infusion of 5,000 crores increases the capital adequacy by 1.02%. We still have to recognize the fact that we all work out of different accounting standards. Yes. And there would be a need to harmonize the standards. So some amount of the 5,000 crores would get adjusted in the harmonization process. We also have the profits for this year flowing into a balance sheet once the accounts are audited and comes into the balance sheet as of 31st of. We're also planning to raise about 1,500 crores or thereabout through AT1. And we're trying to raise another 1,000 crores or thereabout through issuance of shares for the employee purchase program. So when you put all of these things together, and then assuming some amount of divestiture we can do, it seems to me that we have capital adequate to fund the growth for this financial year.
Okay, what is that growth? Is it? Are you looking at 12%?
Yeah, we still talk about 14 to 15%, but in general, our capital requirement per rupee of assets have come down to something like the RWAs are somewhere at 45 because of the mix of the capital. So, but sometime in the third quarter of this year, we would like to go to the market. I'm making an assumption here that we'll be able to show continued growth. I'm also making an assumption here that the amalgamation process would be going smoothly. I think we would be able to raise capital. The last element is that we had made about 13,000 crores of combined profits of all the three companies closing December. Just taking that number and extrapolating it further, I would think we would make an operating profit anything between 18 to 20,000 crores next year. Now assuming, and not assuming, building in FY20. Now building in the fact that the losses for the next financial year would be lower for various reasons, including the recovery cycle, I think we would make a reasonable amount of net profit. And therefore the organic capital accretion will start growing. And the last point, which is the more important one, is that it is not necessary growth is predicated on capital usage. We lag on fee lines. Our percentage of fee to earning asset is some like 0.5. I think for some of the other banks it's at 1.8 and 1.7, not the highest, but even the middle level. So we have significant distance to grow. And as you know, the focus again will grow to growing deposits and current account and savings account. And so for us, there's a lot of things to be done, and all of these things could increase return on equity to the shareholder, and we need not hang the peg at one item, which is credit growth. But that said, the credit growth remain robust. We stay with the direction of 15% credit growth through the next financial year.
Okay. Well, let me. You spoke about integration rather rapidly. Are you happy with the underwriting standards, or with the extent of bad loan recognition? Do you think that your NPA will be lower than what you as a standalone posted in the third quarter, or do you think as the year goes by there may be a little more recognition that you have to do?
I think, I would put it to you this way, that as a part of the computation of the stock swap ratio, we did have a fair amount of work to look at the relative NPA recognition. It's not that NPA doesn't mean that Bank of Baroda did not have some loans on which it needed to recognize. There was some recognition that was required. So we looked at the whole thing together. And so we have a reasonable grip on the extent of provisions required in relation to that. As far as incremental loans are concerned, we had a task force that was multiple task force, 18 of them working under executive directors, that essentially rolled out a common product program for all the three banks together. And so starting today, except for the pipeline transactions, we are underwriting with the same, under the same set of rules, or will be underwriting in the same set of rules across all the three banks, starting tomorrow.
Okay, let me pointedly ask you, your slippages in the last quarter was 3,730 crores. With the combined entity, logically it should not be more than 4,500 crores or 4,000 crores. Do you think you can maintain that kind of a level, or maybe, see, in State Bank of India's case, there was one big jump after the integration. Should we be prepared for something like that for one quarter?
I don't think so, but I would say to you, I would say all this firmly once we get our numbers in place. As of now, even for Bank of Baroda, I would be having the full picture tomorrow morning when we open up. But it does look that the slippages and the forecast are, I would say, are reasonably staying to our guidance, which is that we should see reduction in absolute NPA and a growth of 15% and above. So what I would put it to you is this way, that we also have to weigh some of the negative factors with some of the positive factors, which is to say that this year we will see some recovery happening, some write-backs happening, which should offset any potential downside. But I think the full effect of it will be fairly clear once we get down with the convergence and accounting standards, when we get a hand around these banks. But because of the extent of work we have done during the due diligence, and also because I would think there is a Bank of India policy, the recognition policy, the focus on divergence, etc., I would think the probability of something being amiss is fairly low.
Okay. So slippages under 5,000 crores for the first quarter would be a reasonable assumption?
I don't have the numbers, but it would be a good assumption to make.
Okay. Margins, I want to ask you, because now we have two new rules. You have, the credit, cash credit system, of which 40% will have to be taken as loans. And then also you have this large exposure rule, for which some banks may have to raise capital.
Yes.
So in your own case, for the large exposure rule, will you have to raise any capital?
No.
Okay. No, all of it has been adjusted.
No, we have been working on the fact that these rules would come into effect in 1st April has been known for over a year.
Yes.
So we have already moved, assuming these rules are there, because you cannot start beginning of the year and then hope to defease the risk. What we find,
that doesn't impact.
That doesn't impact. What we find is an interesting thing, which is that whereas risk exposures are high, in many cases our utilizations are low. So we are going ahead and cancelling the limits or converting them into loans so that we can bring the utilization ratios up.
Okay.
So, but we don't have any real challenge with respect to needing capital for the purpose of supporting current exposures to customers that are behind the RBI threshold level for single borrowers.
Okay. So what kind of net interest margin will the okay, first let me come to the cost of capital. Do you see that falling? Do you think you will have the elbow room to reduce rates now?
Let's look at it after this quarter is over, simply because over the last few days, yes, the call rates and other things have been quite high. We're expecting, in general, there's an expectation, at least our Treasury expects, a certain degree of revision back onto lower rates, because they believe post-election the cash part of it will begin monetized and brought into the banking system. There is also an effort by the Reserve Bank of India of getting foreign currency deposits and swapping it. We have also raised close to $1 billion on MTM just this week. It's a T+5 settlement, so we'll get it a couple of days before. So I think one hopes the reduction in interest rate would happen and the transmission would take effect. But as of now, we have to wait for it to happen in the next quarter. But one thing we have seen...
What about margins? Will you...
I think the margins should improve for the following reason, which is that the weighing down of the margin has largely been because of non-performing assets. The ratio of non-performing assets to performing assets is continuously declining because the new assets are performing far better. That should result in margin improvement. We should also see some margin improvement in our international business, though that by itself is not... It's only 25% of a balance sheet, so we should see that. So I expect margins to remain consistent or go up for the only reason that the percentage of non-earning asset as a percentage of the total asset is reducing.
There's no denying that you have a firm grip on Bank of Baroda and the amalgamation process. In State Bank of India, Arundhati Bhattacharya's term was extended so that the amalgamation process is smoothened. Well, if it takes another 12 to 18 months to smoothen out, shouldn't you be staying beyond October 2019 as the MD of Bank of Baroda?
We'll look at that when the time comes. I think at this point of time, there is enough to do. But philosophically speaking and logically speaking, our job is to build systems and processes so that we are not individual dependent.
But this is not something which happens every day. This is a one-off process which will require, and if I remember right, you were given the option to stay longer, but you chose 1 year. So it's really your choice.
Well, we'll do what is right for the bank, right for me, at whatever is appropriate time. But I must emphasize that of late I've been getting undue credit for all that good things that is happening in Bank of Baroda. Really keep telling to everybody it's really a teamwork, and really it's the amount of effort that our executive directors put in, our general managers put in, the organization down the line put in. It is really that effort. I would say this way, that Bank of Baroda has moved substantially upward, not because of results alone, but because the average performance and the average commitment levels have substantially gone up, and the performance of everyone has generally moved up very well.
Mr. Jacob, I'm sure you have said this to your colleagues, and I am not taking away the credit of your colleagues at all. Okay, let me put it straight. If the government offered you, are you ready to stay for 1 more year?
I would say to you this way, that personally it's not a problem choice for me. If somebody were to say stay for 1 more year, you've gone thus far, you can go more, it's a logical decision to say yes and go on. But we have to ask this question from an institution's perspective. The real question to ask is that if there is an alternative candidate who is better, what is the right thing to do? And if that alternative candidate has got 5 more years to go, I think it's the right time to hand over the baton.
Okay, well, that's the word coming in from Bank of Baroda.